me see. All right. So what I want to talk about is when you have a plan and it don't work. I've talked about it before. When you have a plan and it don't pick you up where you want it to pick you up at, staying focused and looking for a secondary entry, but just don't do it all willy nilly. Let price give you a reason to participate. Okay, we tracking. If we track it, say we tracking.
Tracking.
All right. So looking at right these two charts here. All right, y'all can see this. This the same. These the same charts. This I just trade on Ninja Trader, and this I mark everything on TradingView because TradingView is easier to chart. Right. So looking at what we got going on here. No, that's not the right thing. What is this supposed to be? Hold up. 283. Okay, I put 398. Yeah. What did I just do? All right. 283. Okay. All right. So just so you can see what's going on. This right here, this turned out to be not too terribly important. This was something that I was watching as price was coming down. But looking at everything else, do y'all got a good lay of the land of what's going on with these annotations here? Looking at the annotation, can y'all see the annotations? Can y'all see what the names of them are? Or are the fonts too small?
See them?
Okay. All right. So
I can see him.
all right. So looking at this here, and we see here at 9:30 when we open, we took off to the downside, right? And it was plenty. It was the daily low right there. I just want to squanch it up so you can see it. That was the daily low right there. That was the major sell side that I was watching. And then I got another daily low down here. This sell side there, that's another daily low from like another day over, right? And looking at the higher time frame chart here on the daily, see, is that daily low right there, right? So this was the low that was the main low I was watching, and then that was another daily low there at that new week opening gap. You remember what I always talk about, whenever you go to a level, how far below that can you go, right? So below this low here, we got a new week opening gap, and then we got another daily low there. I got that daily low there because if we get to this new week opening gap and we continue past it, how far can we go? That's a daily low right there, right? I'm not putting a lot of weight on that daily low because it's not a swing low right now. You know what I'm saying? And so I'm just looking at the prior day low and this new week opening gap. And then this is a, if price just wants to keep going, how far below that it can go. Okay. So just to get context of, like the levels that I was watching. Okay. So price came down. We got to the new week opening gap, right? Once we got to the new week opening gap, right? You see what we started. What did we start doing once we hit the new week opening gap right here, right? What did we start doing right there? Right. Once we came down here to the new week opening gap, we dropped down below the daily low, right? Pushed back up, failed to get to this SIBI, right? And then we dropped down to the new week opening gap. What did we start doing right here when we got to the new week opening gap?
Consolidated?
Yes, consolidated. Not reject. We ain't reject yet. Right here in this area that I circle right there, Deborah, right there. And when we start consolidating, what are we doing? Yes, consolidating. When we start consolidating, what are we doing? What's up, Lump? When you put up here, what's up? Who that in here? Everybody that's in here, yes, engineering liquidity. Everybody that's in here, we pulling up with the hard hitting class participation. So everybody, come on off mute and just blurt out your answers. The only reason you need to be muted is if you got a loud background. All right. So we start engineering liquidity right there. Okay. All right. So once we start engineering liquidity there, right? Oh, the baby sleeping. What, the baby snoring? The baby snoring. I can't hear the baby sleeping. Never try not to talk. All right, so we right here. What do we do here when we come here? Oh, you got on headphones, right? So we come here like that right there, and pop there, right? What is that right there? All right. What is that? What is that a sign of here? Right. So we come down, we take out the liquidity, right? We come to a higher time frame anticipatory reactionary point. We start engineering liquidity right there, okay? And then let's put some more lipstick on the pig so that we can really get a good idea of what are goings on. Okay. Who know what I just highlighted right there? What is that area right there that I just highlighted? All right, let me spread it out so you can see. Look at it. Let me spread it out so you can see the timestamps on the bottom.
Change in state of delivery?
Can you see the timestamps on the bottom? Uh-oh. I messed up there. I need to come over here. Sorry about that, y'all. Right there. Okay. Can you see the timestamps on the bottom?
Oh, that might be a macro time.
Yeah, macro time.
Yeah, I got a lot of noise out here. I'm walking Dutchess. I know you might hear construction. That's why I ain't saying nothing earlier.
Oh, okay. That's what that was. I thought I heard some Camille Toise plopping all over the place. All right.
Now, hey, let's go.
What's up, Dutcho?
She say, "What's up?"
I heard her. Okay, so we got our macro window right there. Okay. Okay, so now we know we got our macro window there. Let's put this. We'll put this in the center, right there. All right, so that's our macro window. Let's get this back together. All right, so we can see both sides. What's going on with this, man? All right. Make sure they both look about the same. All right. Right there you go. Close enough government work there. All right, so inside our put this on the top. All right. I got a lot going on, so I'm gonna hide this. Anything that's not vitally important to what we got going on, I'm hiding it all. Cause this is just other stuff. You know, you have stuff on your chart that you want to see reactions, and then if it's not lending to your trade, it might still be there on my chart, but I'm ignoring it now. All right, so we come down, we take out the sell side, right? What time do we take out the sell side? We take out the sell side at 9:44, right? That's prior to the macro window, right? That's prior to the macro window, okay? So when we move into the macro window, right, what do? We come down to our anticipatory reactionary point and we start engineering liquidity, okay? Now that we're engineering liquidity, right, inside the macro window, okay, we come here, right, and what do we do right here? Somebody tell me what we do right here. Right. What do we do right there?
Displace.
Before we displace, here we come here, and then we go up there. What's that?
Sweep liquidity.
We sweep liquidity, but what is this right here? We sweep liquidity. We displace all of that. It's happening, but what is that?
Change in state of delivery.
This is
No.
change in state of delivery here, but
Yeah.
right here, right there. What am I drawing out right here? Judas. There you go. We get a Judas swing right here. Take out sell side, immediately reverse take out buy side, right? This is our change in the state of delivery right there. Right? I'll change the state. If you're aggressive, you can look at this one here as you change the state of delivery, because those are the last candles that went. But since this is the entire move, I'm looking at this as the change in state of delivery. Okay, because that's the entire leg. Right? If you're aggressive, you can come here, but that's the entire leg. Okay. So
Is the change at the open of the candle, or it
yeah,
includes the wick?
open of the candle. So if it's a down closed candle, it's there, right? If it's an up closed candle, it'll be there. It's at the open of the candle.
Okay. Of the leg that gets sweet.
The order
Is that
block.
how it, like,
It's the order. The order block is the change in state of delivery. That's the
Okay.
simplest way to remember it, right? The order block is the change in state of delivery. So here, like here, when we drop down there, right? Once we drop down there like that, that's the change in the state of delivery right there. It's the open price of the order block, right? Whatever
Okay,
your
that makes sense.
whatever your order block, the order block is the change in the state of delivery. Just like with a inversion fair value gap, the inversion fair value gap, that's a type of change in the state of delivery. So whatever point you get to on that, like just say this is a right here, right? If we looking at this right here, right? Once we get up here, whatever point you get to first, right? You get into the high, right? Just like on the order block, you're coming down, you get into the open. You're not counting the high on the order block, but whatever point you get to first, and when you're coming back up, you get into the open. Like, you see what I'm saying? When you're coming back up to it, it's the order block is to change the state of delivery. That's the simplest way to think about it, right? But you're looking at it as a change in the state of delivery because it's reversing what was happening, right? Like we were bearish here, and now that we have taken liquidity, right? We've taken sell side, engineered liquidity, right? Swept sell side, immediately reversing, took buy side, Judas swing. Now, boom, that's your change in the state of delivery, because now the market has said, okay, I'm no longer going down. I'm ready to go up for a while to a particular point. What is that particular point? Who knows? Who cares? But that's what makes it a change in the state of delivery, because you're switching from bullish to bearish, or bearish to bullish. You're switching. That's the point when the algorithm says, okay, I have switched. Okay, that's good. All right. So now, we have this 1 minute fair value gap here off of this displacement inside the Judas swing, right? Where is this fair value gap created, right? What's the significance of that fair value gap right there?
It's in discount.
It's in a discount, but what makes it significant? What makes it like higher probability, right? When was it created? During the macro time. Okay, boom, during the macro time. So this is where I want to get long, right there. I want to get long here, right? Remember when I started out talking about how if you don't get the entry you want, right, letting the market give you, don't do it willy-nilly, right? Let the market give you something to work with. All right, entry I wanted. This is the entry that I wanted right here. Okay, now as you see, price did not retrace back down into that fair value gap. Okay, price, as you see, this is where I entered here. Okay, I entered here. All right, And looking over here, that would be, let me mark so you can see it over here. Right. That would be here. All right. All right. Actual entry. Okay. Actual entry. Now, see how price did not come back down to my entry, right? Where, looking at what price, now I'm gonna make this a little bit bigger so we can see good. All right. Looking at what price did right here, where did price trade back to? Right. It didn't come back. You know, whenever you want to see what happened, where do we look?
To the left.
Yes. All right. So I wanted to get long here, right there. That was my desired entry, the entry that I wanted. Price did not come back and get me. Where did price trade to? You have two options, right? You got two options you can pick from, but what we already talked about one of them. And we didn't talk about the other. But, you know what I'm saying? Because price, when you're looking at price, I try not to force you into only think about what I think about, but you got options coming this way. You know what I'm saying? You got options to look at, but we already talked about one of them. So,
Was it an order block?
yes, it came back to the order block. And what do we say that was right there? What did we say that order block price was? What did we say that was right there?
Change in state of delivery.
Yes.
Yeah.
That was our change in state delivery right there. So price did not come back to the imbalance. All right. It did not come back to the imbalance here where I wanted to get picked up. It came back down to the change in state of delivery. And there's a very small fair value gap right there. Right. I'm ignoring that fair value gap because why? We came down into the change in state of delivery. Right. But we did not come here. Ended up being a breakaway gap. I got left, right? So now that I got left, now I'm waiting for price to give me something, right? I'm waiting for price to
Also see it. Oh, sorry.
say again.
Could
Go
you
ahead.
also see didn't go into it because it's a balanced price range, like at that point, since it like moved away from it.
Yeah, you want this. This is
Yeah.
a time when you want to see this be a breakaway gap and not get touched at all. I was hoping for an institutional order flow entry drill, but the if it's not touched at all, that's a really strong breakaway gap. And because it is a balanced price range down here, you want to see this left open, right? You want it. So since we got the balanced price range, price left this open, that's confirming the bullishness of this move to a certain point. Okay.
That probability is increased because it's within the macro time.
Yes.
Like you don't want to see it come back in because it's during the macro time. And if it does, like it does not, then that shows it's strong.
Yes. Now, and I'm glad you said that. So during the macro time, right? The macro time price should spool towards liquidity or an imbalance that hasn't been engaged yet. Right? You want to see it going toward liquidity or an imbalance that hasn't been engaged yet. Right? So when we came below this low right here, that's why I said before, I was like, we engaged this liquidity before the macro window. Right? So here's our major liquidity that price was moving toward. Right? Now that we're in this liquidity pool and we move into the macro window, right? We start engineering liquidity, letting liquidity build up above and below the marketplace, right? And then when we get halfway through the macro window, right? What happens halfway through the macro window, right? We do what? We go into what?
New hour.
A new hour, right? And when we go into a new anything, we anticipate a Judy swing, right? We get the Judy swing. So now a lot of stars are aligning, right? We've come to sell side. We're engineering liquidity, right? This is, yes, it's some sell side down here, but we're respecting consequent encroachment of a new week opening gap, right? We're really respecting the whole new week opening gap because the bodies are sitting right on the top, right? We come into a new hour. We sweep sell side, immediately come back and take out buy side. That's a Judy swing with displacement, fair value gap, right? Price refuses to get down to this fair value gap. It's inside a balanced price range. We got a breakaway gap. Then price moves away again, right? Creating not 1, 2, and then now 3 different down close candles, right? Price never trades back to that down close candle. Never trades back to that down close candle. Never trades back to that fair value gap, right? So when price comes back down to this order block right there, right? What happens right here with these two down close candles right there? What happened with those down close candles right there? What did they do? All right. When we look to the left.
Respect
Yes. Respect what?
the down close candle.
Yes. You're respecting the down close candle right there. Right? Once we created this, we got this, let's come back. We got this potential order block. We got this potential order block. We got this potential order block. When we get here, when we make this potential order block, right, coming up there, what did price do here and then through here, right? What did price do? This move first and then that move, right? So what did we do here? Looking this way. Once we made this down close candle and went there, what did price do? Looking that way.
Did it make equal highs or fail to take out the high? I can't tell. Oh, it took it out. Okay.
We took the high.
So around the internal buy side and then retrace.
Right. We took the high. Right. So we came here. Now, this move right here, what did I say we did? We took out sell side, immediately came back, took out buy side with a Judy swing, right, with displacement. We traded back down into the order block and we displaced again. Then we took out the high right there, right? So when we take the high, that's an indication of, right, bullishness, right? And then what do we say about when we go above it and then close back down? Price is saying, I want to go this way, but not yet. I got to do something first, right? So I want to go this way, but not yet. What is it trying to do, right? So now that's when we look back and say, okay, if we're bullish, right, we've got a breakaway gap. We got order block never traded to, order block never traded to, and so far a fair value gap not traded to. So now you're watching here, right? And you're watching here. Okay. Now, price comes back down to the order block, right? And price once respects the order block, twice respects the order block, right? And then we come up here, right? Once we come up there, trading above that candle right there, right? As soon as we trade above that candle right there, what does that make this right here? A potential what?
Order block.
Yes, right? So now we got a potential order block right there. Okay. Soon as we trade up above there and close above it. Now, this candle hit that price right there. See what that price is right there on that order block right there. You can see that 20,301 even, right? Price traded back down. Now, in this instance here, right, what I was waiting for to see if we get a fair value gap here, right? When this candle opened, as you see here over there, I didn't enter on this candle, I entered on that candle, right? So I was looking to see if we get a fair value gap right there, right? What happened right here? This is a potential what? When we trade down right there, that's a potential what? Because we've been so
Fair
strong.
value gap.
We've been so strong here, right? We get a nice bullish move up, right? With the potential of creating a BSC this big, right? But then this candle trades down here. So right now, this is a potential what?
Immediate rebalance.
Immediate rebalance, right? So if I'm anticipating this to be an immediate rebalance because price has been so strong, right? Down here, remember down here, it left me. It didn't come back to the fair value gap, right? We've created a new order block. We didn't come to this fair value gap. And now here we trade down to prevent a fair value gap. So now at this point, I'm anticipating this to be an immediate rebalance, right? That's when I put in my limit order right there on the order block at the change in state of delivery. As you see here, got picked up on this. As this candle came back down to the change in state of delivery right there, boom, got picked up right there. The low of this candle right here is 20,300. That's a very good entry. 1 point of heat on that trade right there. 1 point of heat. That's a very good entry, right? So with immediate rebalance, right, what do you want to see, right? So this candle here is the immediate rebalance. So with this candle at the latest, that candle, what do you want to see?
Money
Start
Well,
slow.
price
go.
to
Yes.
get up out of there.
Yeah, get up out of there.
Speed.
Speed. You want to see speed. Get up out of there. You want to see it gone, right? And then we get the speed right there, right? We get the speed right there. And the target was, I think I had it like maybe 1 point above the high of this first presentation fair value gap, right? Because since we got this breakaway gap, right? And then we traded back down into the breaker, into the into the order block, right? We're respecting the breaker, respecting the order block, right? I want to see price push through the first presentation, right? I'm not being greedy and going for the high. I'm not being greedy, asking it to go back to midnight, right? I just want to see it push through first presentation. Why? Why do I want somebody explain? Somebody take a guess at why I want to see it push through that first presentation. All right. Why do I want to see it push through that first presentation? All right, this the first presentation right here. Why do I want to see it push through there and not just try to take it when it touch it or take it at the high, right? The high of it is 20,340, and my target, you see right there, say target field. My target was 20,341, so it was 2 ticks above this right here. But why was I looking to go above this and not just take it inside it somewhere?
Take out old high.
No, not take out old high. Not take out or high.
Because it's a magnet and price should be drawn up there.
Say that again. You kind of broke up.
It's a magnet and price should be drawn up there. And to see if the bullishness would continue.
What's that right there?
Is there a new day open? New
Yep.
week opening gap?
We got a new day opening gap.
New day opening.
Right.
gap.
We got a new day opening gap resting above it. Right. So whenever you're looking at a target, right? Whenever you're looking at a target, right, and you got extreme bullishness or bearishness, right? You always want to. It don't matter. Even if you don't got extreme bullish and bearish, you want to know how far past this target can I go? All right. How far past this target can I go? And right now, you have a new day opening gap right there. Right. And new day opening gaps are magnets for price. All right. And if we look at, right, this is a new day opening gap there. And this is today's new week opening gap right here. Right. That's the new week opening gap of today. Okay. So we got today's new day opening gap, and we got a prior new day opening gap right there. Okay. What PD array exists that's not on the screen right now? Right. Based off of this and that. Let me help you out here. Where you at, Lump?
Is that Event Horizon?
Event Horizon.
There you go. There you go.
I was making the payment. I couldn't say nothing in there, man. I was in child support.
Okay. So Event Horizon is right at the top end of this first presentation fair value gap, right? The upper quadrant of Event Horizon is there, and then the new day opening gap is there. I'm not being greedy, right? I'm not being greedy, right? When I'm looking at Event Horizon, okay, I'm pretty much looking at how price reacts right up in here. From this lower quadrant to this upper quadrant right there. This is Event Horizon, but this is where I'm looking at how is price reacting inside here, right? And when it's small like this right here, I'm just eyeballing it, right? If it's a big one, I actually draw out the area so I can see it. But when it's small like this right here, I'm eyeballing it. So that's why I had my target right above this right here, because we got a couple new day opening gaps. Michael would say you got a cluster. You got a cluster of new day opening gaps up here, right? They're drawing price toward them. You got a first presentation right there. Is drawing price toward it. You got Event Horizon right there. Is drawing price toward it. So when I don't want to take it here because I feel like I'm cutting myself short. All right. I got Event Horizon here. All right. That's right there. Or I can go 2 ticks above it and get a smooth 40 points. You know what I'm saying? So I took the 2 ticks above it to get the smooth 40 points, right? From 301 to 341, right? Did it go a little farther? Yes, it did. But I think I got a very good exit on that right there. I'm not mad at it. It ain't every day we get exits, that entries and exits that good, right? It ain't every day we get that. We get an entry with 1 point of heat, and we get an exit where, what's the high on that candle right there? 8 1/4 points, right? So I got out at 41 and it went to 49.25. So 8 1/4 points from the high, right? If I would have tried to go for 50 points, I wouldn't have got it. I'd have been short. I'd have been short trying to go for the 50. If I'd have got greedy trying to go for the 50 or trying to go for what is that, midnight? What is that right there? What is that price there? 9:30 open, right? 9:30 open, or if I tried to go for midnight up there, midnight higher, wouldn't have got it. Would have been greedy. But I said all that to say, when you don't get your first entry, right? This is what I was supposed to be focusing on, right? When you don't get your first entry here, right? Do y'all understand why this was my entry and not trying to get in here or trying to get in here, right? Do y'all understand why that was my actual entry? Anybody not clear on why I chose that as a secondary entry? Everybody understand it? Everybody got it? I was clear enough when we walked through it.
Yeah.
Yeah.
All right. And that is it, man. That is it.
Tim, can I ask you a question about the ES?
Yes.
It's similar to what you showed, but I don't know. It's on the 1 minute. I just wanted to ask about displacement.
Okay. At what time?
So the 9:47 candle versus like 10:03.
9:47 and
Just
10:03.
those two.
10:03 or 10:03 right here. Okay.
Yeah.
All right.
So when I prior to the 10 o'clock, like the 10:03 happening, I assumed that the 9:47 was essentially displacement because it took out the high to the left of it, like right beside it.
Right here.
And there's also a fair value gap. Yeah. So I just wanted to confirm, is that technically displacement or it's more so the what looks at or what 10:03 is showing?
Both they're both displacement. They're both displacement. But the thing of it is, you have to what's the most important factor in ICT concepts? Time. Time is the most important factor, right? So when you look at this one here, this was created, what was it, 9:47 right there. And then this one here was created at 10:03, right? 9:47 is before what?
For the macro?
Before the macro, right? So 9:47 is before the macro, right? And 10:03 is during the macro, right? So there's nothing wrong with taking this right here, but you have to deal with this manipulation, if you will, coming into the macro time frame, right? You're coming into the macro time frame here because anybody that has a stop right there, anybody that's got a buy stop right there, touching that right there takes them out. Now, if you have a limit order there, you may or may not get taken out. But if you got a sell stop right here, if you got a sell stop sitting there, a market sell stop, as soon as you touch that, you're taking out. You're taking out. So coming into this macro, boom, wipe them out. Right now, if you want to get long there, it would need to tick at least one tick under to pick you up on a limit order. Because if you mark it in right here, your actual field price, if you mark it in at 58, 53.25, your actual field price is going to be 58, 53.50. If you mark, because you're going to get a market fill. You see, and if you notice, then that's actually one tick below your actual field price, right? And if you want that to be your price, the market will have to come down to there. to give you that price on a limit order. But on a market order, you would be taken out. So coming into the macro time, it's manipulating people out, right? That touch is enough. It don't have to come all the way down here, right? It's manipulating people out, then it's displacing. So this is displacement. You're not wrong, right? That's why whenever I take, like if I put my stop below a low, I'm always going like 4 ticks below the low. See, because you can get in here on this, you can get in here on this order block there, right? But if you put your stop right there, you're going to get taken out. So that is displacement. You're not wrong. It's just that the time aspect of you want to look for these signatures at the correct time. So you're not wrong at looking at this because this is during a kill zone. But when you're going into the macro time, you want to give the more weight on the macro time. So if something is setting up here, right, I would just err on the side of caution and take a less favorable entry inside the macro time as opposed to taking it just before the macro time and getting manipulated out.
Okay.
Make sense?
Yeah, so more like watching it, but waiting for the macro, because that's when it will, or that's more
Yes.
favorable.
Yes, because during the macro time, that's when you want to see price start to move, right? You want to see price. It don't got to be right at the beginning. It ain't got, like, you want to see price start to show you that it wants to do something. And if you want it to, all right, let's zoom in here and you see here how here this was the displacement right there that you was looking at, right? And then if you notice when we came down into the macro time frame, right, we did touch this, but we wasn't trying to continue down. We just came down there, set them equal lows, and then we started, moving back up, right? We started moving back up. And if you look right here, okay, right there, we got we're excuse me, we're respecting that Bissy right there, right? We came down to the low of it. This candle here came down into this down close candle, right? We made a doji, made another doji, right? And then this candle here, respect consequent encroachment, right? This candle here, respect the whole thing. This candle here traded back down to consequent encroachment. We created another down close candle, right? And then we took off, right? That's when we took off right there. So if this right here was if just say you entered there, right? And let's say you had your stop, a couple ticks below there, and this didn't take you out. Yes, this would have, made your butthole clench up. But when you see this right here, and we're respecting this fair value gap, and we're not trading below these down close candles, right? That's when you can know, okay, I'm on the right side from over here, right? But this waiting for this displacement over there, that right there is like, that's more of the confirmation that, yeah, we are going up from somewhere, but then you fall into the same thing where price doesn't come back to get you here, because you're not going to always get this is what I talk about. When you wait for the confirmation move, a lot of times you get left. All right. You wait on the confirmation move, and then a lot of times you get left. And then it's the same thing here where we end up coming back down. This one did create a fair value gap, but we came back down into the order block and then went up. So this down here makes sense what I was talking about with you, but you're seeing it right. That was displacement, but it's just coming into that macro, you know what I'm saying? We manipulated down and then went up.
Yeah, that makes sense. Thank you. I had a second question.
Go
I
ahead.
would say Q&A, but I'm gonna be working, so I want to make sure I get it out to you from now. On this, I guess basically there's equal lows lower. It aligns with yesterday's previous daily low.
Here.
Yeah, basically there. I like right now, my thought process, I'm thinking that because we came down earlier in the morning, but we failed to take out the low, and now that we're going up, would you say that I'm on the right track to think that like we're it's something I think you said yesterday where we're going up to kind of take out stops, then to come down later and take out the equal lows? Because like I feel like equal lows are clear, um, like targets, if that makes sense, and it's on the daily time frame.
Yeah, it
That's
that makes sense. Let's look at it. Let's look at what it got going on here. So we're at it in when we're at all time highs. Y'all know when we're at all time highs, you don't have anything to go off of over here. So it's like you have to kind of just play price. You got to let price form price action, right? So looking at the daily, we came back yesterday. We came back down and touched the high of the Bissy, right? We came down, touched the high because both of these candles are, let me see, that's 8,500 and 8,500. Okay, I mean 8050, 850, 5850. So we came down, touched the high of it, and then closed off of it, right? So Monday we went up, Tuesday we came down, and then now Wednesday we just kind of doing. Okay, so right now it's looking like we want to dig into this, right? It's looking like we want to dig into this, but until we actually we don't on the 4-hour time frame, right? It's looking more likely that we want to dig into there because we've already traded into the 4-hour Bissy that's there, right? And now we've gone up and we've come back down and created an inversion fair value gap there, right? So we got an inversion fair value gap here, right? And we haven't traded up to this SIBI right there. So now looking at this right here as a balanced price range there, right? Looking at that as a balanced price range there, don't want to see it dig back up into that. Let me just do this right here. Up. God dog it, Tim. All right. All right. Don't want to see it dig up into that if we are to come down to that. All right. So that's on the 4-hour. All right. Let's go down to 15. Okay. Now, then on the 15-minute, see, we're still we're doing, all right? But looking at the 15-minute, right? We came here, went up, and then now we're here, right? And we got these equal lows and relative equal lows here at a prior day high right there. All right, so this the balanced price range. Don't want to see it digging up too deep up into that. All right, we're fit of fat and around here. Yeah, right now I just would be like I just would have to sit neutral because and the reason why I say that is because if we come from this low here up to the high, we're right at equilibrium. You see what I'm saying? We can still go either way, and we're at all-time highs. So it's like you don't want to try to pick the top when you're at all-time highs. And right now we're just at equilibrium, right? So it looked favorable to dig into this, but since we're at all-time highs, you stick with your old bias. So I would just want to see it hit that and go, since the old bias is bullish. You see what I'm saying? So I would just want to see if it do come sweep this right here. I just want to see it hit it and go, right? Because the old bias is bullish, and I don't want to try to pick a top, and then until it came down below this, then I'll be looking for it to come here. Right, but right now it's not. It's just got me neutral bias because we right there at the middle. Make sense?
Yeah, and kind of like how you were drawing on it, because we consolidated before and we went up. It could be that we can consolidate and go down, but like
Yes.
you said, we're at equilibrium. It's just we're in the
Yes.
middle right
Yeah,
now.
we're
Okay.
in the middle. So we consolidated here and went up, right? And then we consolidating here, okay? But since we right here in the middle, it's like 50-50. We can go either way. So
Yeah.
I will want to see price come here and get below this, right? Get below this and then consolidate here, right? If we got below that and consolidated there, then I can say, okay, yeah, now we're trying to right? We're trying to complete this. You see what I'm saying? But I would want us to get here first. Look for something. God dog it, Tim. Right? I want to see it come below here, consolidate here, and then look for the move there, like that.
Okay.
Just like how, see, like here is acting like it want to give us the push up and then down. But since we're at equilibrium, right, it can go either way. Right, it can still go either way because we can see here manipulate up, then we can manipulate down, then go up. That's why I say, like, whenever you know what I'm saying, don't try to pick the top. Let price show you that is the top. I like to err on the side of caution when we at 50-50. Show me what you want to do, and then I'll jump on board. Yeah. But yeah,
Thank you.
you see it. You seeing it right. You seeing it right. It's just not clear cut. It can go either way. And it's like that. And don't and for everybody that's listening, don't second guess yourself when it's not clear. Right? If it's not clear, it's not clear. Because when it's clear, it's clear. So when it's not clear, don't think like, am I seeing this right? Don't start reading into it. You know what I'm saying? Best thing to do, what I always say, squanch your chart up, right? Squanch your chart up, sit back and look at it and be like, do that make sense? Right? Because if you can make an argument for both sides, right? You can I can make an argument for both sides right now. If I can make an argument for both sides, it's not clear. So I stay neutral. I can make an argument to the upside, right? Real simple. We got a balanced price range that price didn't want to go down into, right? We displaced up. We came back to a discount, and now we can go up, right? I can make an argument for the bearish side. We displaced up, right? Now we coming down, we're reversing, consolidating here to come down and complete the market maker sell model. All right. I can make an argument for both sides, so I'm just neutral. All right. If you see it, you see it. If you don't see it, you don't see it. All right. I just want to assure you again that you're seeing it. You're seeing it correctly.
Thank you.
Anybody else got anything? Oh, go ahead.
Because you said we're at the at all-time highs. When
Yeah.
we're using the Fibonacci, how do we like we set it up with using the standard deviations, right?
Mm-hmm.
Just like so, how do we or what time frame should we use it on to not predict but like see where we could go since we're at the highs?
Whatever your time frame of choice is, like if you use it like on a daily time frame, it's whatever your time frame of choice is and what range you're looking at, right? So if you're looking at let's just say you're looking at this area right here, right? So you look at we went from, give me another. So we came up here, right? And then we started consolidating, right? But just say, look at this as like just a move back down, right? We came up above the high and then we moved back down, right? It's better if you got like a swing leg to look at, right? So we're just going to use this swing high right there as this is our swing down, right? Because you really want to look at like a swing leg, right? So looking at this right here, if we come there and say that was like the low of our swing leg right there, right? If we go, I got this backwards. I need to reverse this. and we can look at, okay, from this swing leg, that's one standard deviation, you know what I'm saying, above this swing leg right here. So that can be a potential target, right? Like 1.5, you know what I'm saying, you can look for like some type of retracement or reversal. 2, that can be a potential target. That's on a daily time frame. You see what I'm saying? But if you, let's just say if we looking at a hourly time frame, right? If we go to an hourly time frame and we come here and we can even do it from like way down here, right? Looking at this swing here. And when I say the swing, it's like you look at like the swing point, you look at this area here as like a fulcrum point, and then that's your leg right there, right? So looking at it like that right there, you want to say how far can this area swing up, right? How far? Sorry. Come here. I'll get this right here, right? This is your fulcrum point there, right? So you want to say, how far can this swing? You see what I'm saying? Like this leg here, we're looking at this move. How far up can that swing, right? That's what we're looking at, right? So looking at that there, and we're going from this low back to like the high, the fulcrum point, right? Here we are at that's our one standard deviation right there, right? This is our one standard deviation right here at 90.75 right there. That's one standard deviation right there. And then looking at like 1.5, we'd be anticipating some kind of like pullback when you get around that 1.5 area, right? And we got 2 standard deviations up there, right? It just depends on like the time frame you're looking at, right? You want to go to your price leg, your leg that like started the move, right, from that lowest low, and then go over to, because remember when we looking at institutional market structure, right? Do you remember when we talked about institutional market structure?
No, not really.
Okay. Remember when we used to draw a little smiley face, right?
Oh
we
yeah.
we used to draw a little smiley face, and then we go from the lowest low back to the price. Well, we just use this high right there, right? We got the swing low, swing low, swing low. You got the 3 swing lows that create. Matter of fact, we can put one there, right? We got the 3 swing lows that create a swing low, right? You got to swing low, swing low, swing low, and then make the swing low, and then make our little smiley face, yeah, yo, right? Then you go from the lowest low up to the prior high, right? And then project it out, right? Project it out. Then we go, that's our one standard deviation there, right? Close enough for government work. I ain't got it exactly on there, but that's the one standard deviation. And we see here, looking at that, all right, we went above that, right? Then we got our 2 standard deviation right there, right? Made it to 2 standard deviations, right? Then we pull it back down. We got that balanced price range that's right there around that 1.5, right? And then now we're sitting there at that 1 standard deviation of there. And can we make it to 3, right? That could be a potential target up there, right? You say, okay, I believe we still going bullish. That could be a potential target up there at 3 standard deviations. You can look for some kind of reaction at 2.5, right? Just like you see how we got the reaction at 0.5 right there. You look for them like this reaction at the 0. That's the top and the bottom. Then we got some kind of reaction at the 0.5. We got a reaction right there at the 1, right? This 1.5 is like we created some kind of significant event there, right? We ain't get no consolidation, but there's a significant event there. There's a higher time frame balance price range right there. And then right here at as soon as we poke above the 2, right, we stopped at the 2 standard deviations and then retraced back down into this area here, right? But that's how you project that. It just depends on the time frame that you're looking at, and that's why I was like, it's better when you got a price leg that you're doing off of, because you can use the institutional market structure.
Okay, because I don't know, I'm guessing that's how you're supposed to do it, because I've been anchoring it to like from a swing low, but to the most recent high. So like closer to the right rather than you went backwards. So I think that's why I'm getting confused.
Yeah, you want to go backwards. You want to go
Yeah.
backwards because the reason why you're going backwards is because, remember I said it's like a fulcrum. You want to see this price leg here. This is our price leg, right? How far can this swing up, right? How far can it swing up? You're not looking this way, right?
Yeah, that's what I've been doing.
You're not looking that way, because this is once you start moving up, right? That's once you start moving up, right? What you want to know is how far can this swing up, right? This move here, how far up can it go, right? So, and then this is like the base of the move. So this is letting you know how far can the move actually go. And then what you can do is, when you want to, like, just say if you entered over here, right? This is where you enter that over here on this retracement back down right here, right? Just say you got in off this leg going down right there. What you can do is, when you have your base projection there, right? You can take, right, another projection and base it on the leg that you got in on, right? And look for areas where they agree, right? So this 3 standard deviation at that 1.5, this 2 standard deviation just above that 1, right, where they agree. You can look for targets based off of, okay, this is when I got in, and based off the overall move, right, I can target it. Like if I'm looking for a 1 standard deviation off of this right here, then I can target this 2 standard deviation off of my price leg I got in on, right? If I'm looking for a 2 standard deviation here, I can target you. This is split the middle there, right? You can say I'm going to target, instead of doing the 4 or the 4 and the 5, right? I could split the difference and get like a, let me see, a 4.25, right? Right, I'm gonna get a 4.25 that, because it line up right there, just above this, right? If you feel like, okay, I don't know if it's gonna go that far, but you can either go shorter or go in between, right? In between, if it's falling in between, splitting the difference or whatever. But that's how but you always want to go from, because you want to see how far it can swing up. Like whatever leg you're getting in on, you want to see how far can it swing up. Right, so you go from the low to the prior high, right? Going to the left, you put it, and then pull it over there to the left, and then let it extend out. Make sense?
That's a good tip. Thank you.
All right. And like I say, it don't matter what time frame you use, but you always want to look for like a price leg, and you want to look for like that institutional market structure, right? The market showing you, okay, this is what I want to do, right? We're forming this institutional market structure. Then you run your fib, because you want to anchor your fibs with some type of theory behind it. You don't just want to pick a random high and low and run your fibs, right? That ain't doing you no good. You don't want to just say, okay, I'm gonna put my fibs here, and see. You want to have a reason for anchoring your fibs based off of what institutional order flow is. All right, man, y'all. Hopefully y'all got something out of this, and hopefully this stuff is starting to click. We sprinting now, man. We sprinting, and I like to try to, force y'all to really think about what price is doing, and start to lean on what is price telling me more, and lean on what I want less. If you see it, if it's obvious, it's obvious. If it's not, and remember, stacks on stacks on stacks on stacks, blocks on blocks on blocks on blocks, right? We always got to refer back to this stuff. right? Refer back to it. That's why we constantly want to refer to our notes. That's why we constantly want to go back, and it be in there. The stuff be in there because, you know, just like, and that's why I try to make little things to make it stick. Just like when I said, hey, you remember when we talked about institutional market structure? And Shai was like, no. And I was like, when we draw the smiley face, and she like, oh, yeah, I remember that. You know what I'm saying? Little small things. Just find little nuances or smaller things that make it click in your mind, that make it make sense to you, right? So, all right, man. Till the next time. Y'all be safe out here in these trading streets, man. I'm gone.